Hey guys, it's that Dividend guy coming at you with another stock market news update. So today I noticed that Netflix was actually in the biggest losers when it comes to the S&P 500. It dropped over 7% after hours trading, and I wanted to see exactly why that was. Generally, Netflix is one of those really high flyers, one of those stocks that even like guys like Jim Cramer and other YouTubers are really bullish on. So I wanted to see exactly why it fell so far. So, according to this Reuters article, Netflix falls short on new subscribers as pandemic boost fizzles. Netflix Inc., ticker symbol NFL, on Tuesday posted its weakest subscriber gains in 4 years as streaming competition increased, pandemic restrictions eased, and live sports returned to TV. The company added 2.2 million paid subscribers globally during the quarter that ended September 30th, missing Wall Street's target of 3.4 million and its own forecast. Earnings per share also landed below analyst expectations at $1.74 per share. The consensus forecast was $2.14 per share. Shares of Netflix, one of the biggest gainers this year as people stayed home amid the pandemic, dropped nearly 6% to $494 in after hours trading on Tuesday. Domestic subscribers were flat, which highlights Netflix's saturation in the US. With domestic additions slowing, revenue growth will likely come from price increases. The company reported a blockbuster quarter at the start of the worldwide coronavirus pandemic, adding 15.8 million paying subscribers from January through March. Netflix had warned investors that the sudden surge in new signups would fade in the latter half of the year as COVID-19 restrictions eased. Netflix forecast in the fourth quarter said it would bring in 6 million new subscribers around the globe, short of the 6.51 million that analysts expected. The streaming video pioneer is trying to win new customers and fend off competition as viewers embrace online entertainment. During the third quarter, Netflix released Emily in Paris, Enola Holmes, and The Devil All the Time. Netflix acknowledged that competition was increasing as studios across Hollywood, from Walt Disney Company to AT&T to Warner Media, have restructured to compete more directly for video subscribers. Competition for consumers' time and engagement remains vibrant, Netflix said in a letter to shareholders. In recent months, major sports resumed play and recent streaming services, including AT&T's HBO Max and Comcast Corp's Peacock, offered audiences new options. Netflix said its results reflected the fact that it saw such a big surge in customers earlier in the year. We continue to view quarter-to-quarter fluctuations in paid net ads not as meaningful in the context of a long-run adaptation into internet entertainment, which we believe is still early and should provide us with many years of strong future growth as we continue to improve our service, the company said. Netflix officials noted that the company had pulled in more subscribers in the first 9 months of 2020 than in all of 2019. It ended the third quarter with 195.2 million global streaming customers. Next time we get together, we should be over 200 million members, completing a year of 34 million additions in the annual record. The company also said it expected to complete shooting over 150 productions by the end of the year, and it would release more original programming in each quarter of 2021 compared with 2020. Revenue rose 22.7% to 6.44 billion in the third quarter, edging past estimates of 6.38 billion. Net income rose 720 million or 1.74 per share in the quarter from 665.2 million or 1.47 per share a year earlier. So guys, really what's happening is Netflix is finally realizing that there's a lot of competition in the space, and they're having to compete now more for eyeballs than any other time in history. You have to think, guys, HBO has Friends, has Big Bang Theory, Disney has every kid's childhood, they have all the Disney Channel content, they have Pixar, they have Avengers, they have a plethora of content, and even now Apple has just bought Charlie Brown. So the thing is, they have a lot of competition in the space. And the thing is, when you're a pioneer like this, you have to think they were getting contracts from other companies like Disney, Warner, and Comcast. Everybody wanted to be on Netflix because it was the place to be. Now these companies are learning that they can build their own streaming services. They don't even need to go to theoretical releases. They can make more money just producing the stuff in-house and releasing it on their own streaming service. So now Netflix is having to build its own content library because it's losing so much to those other companies. So I think Netflix will be fine. Like I said, they're still in like every house in America. People love Netflix. There's a lot of shows on there that they've produced themselves that are original content that people really like. They've had a lot of awards. They've had a lot of very successful stuff built within house. It's just Warner has such a plethora of content, and Disney has even more. So, as well as Comcast and Apple are now in the streaming game, it's just going to be harder and harder for Netflix, and I'm not surprised that they're not gaining subscribers. It's just going to be an all-out war depending on what shows people want to watch. I mean, Warner has Friends. I know a lot of people were ticked when Friends announced that it was leaving Netflix. People will leave Netflix to go watch Friends. People will leave Netflix to go watch Big Bang Theory. People will go to Apple TV to watch Charlie Brown. People will you see what I'm saying? There's just, and Comcast, I believe, has The Office. So there's just, and Hulu as well. Disney has Hulu and has a bunch of shows on there. It's just Netflix is slowly losing its big library to the companies that own it out in the first place, and they're going to have to deal with the fact that people are going to leave for better deals. So let me know, are you guys bullish on Netflix stock? Are you surprised to see them losing market share? I know Disney Plus's numbers have been crazy. They said that they're already the point subscriber-wise where they wanted to be in 2024, so they're way ahead. I just think Netflix is in a content battle with big heavyweight hitters that they can't really fend off. I think eventually Netflix is going to have to rely specifically on their own content, and I really don't know that they produce good enough content to match what Disney or Warner or Comcast is going to offer. Let me know what you guys think in the comments down below. It seems like they grew revenue year over year, and their subscribers are going up, which is great, but it's just not the numbers that Wall Street was expecting. That's what I'm getting from this. And competition slowly eating away at their market share, which I predicted was going to happen just when Disney got involved. Now they have HBO Max and Apple and Comcast all trying to take subscribers away from them. So let me know what you guys think in the comments down below. Are you bullish on Netflix still? Are you a bigger fan of another streaming service? What streaming services are you planning on having? Like, are you going to get rid of Netflix for Disney? Do you want to have HBO Max? Let me know. Currently, I have Disney Plus, and that's it. But I would be willing to get HBO, especially for Friends and other content like that. But let me know down in the comments below what streaming services you guys are planning on having. Thank you guys so much for watching. Remember to subscribe to my channel, That Dividend Guy, and when you do, hit the bell notification so you don't miss any of my updates. I do daily portfolio updates, I do stock market news videos like this, and I also do dividend increases for my dividend investors out there. So thank you guys so much for watching. I'll see you guys in the next stock market update. Take care.